Yes. What up, guys? It is Friday. So let's get happy early weekend to you guys. I hope that trading was going good for you guys this week. And it was okay. The markets were okay this week. It's been a choppy week of trading. US dollar is killing it this morning and yesterday. So what I mean by that is the DXY is back up. I just want to hop in here, come into what we're coming into for the last week of October, and then be prepared that on November 2nd or November 3rd is when they plan on doing what is it? When is Wednesday? When's Wednesday? November 2nd, which is Wednesday, that is when they plan on doing another 75 basis points. So that would be the FOMC meeting. I want to hop into here, in here. And it says right here that the Fed is barreling towards a fourth straight. This is the fourth time that they raised rates this year. Isn't that crazy? The fourth time. So um fourth straight 75 basis points, you know, November FOMC meeting, and then the meeting could let's see right down. The meeting could serve bro. So I don't know what's up with this. So it says that the meeting could serve as a critical stage in our ground for future plans, whether and how to step down to 50 basis points in December, which I highly doubt it because they're talking. This is on Twitter. From Nick Tamaros. I'm sorry if I butchered his name. So he published this on Twitter and he's following them. So this is pretty crazy because at this stage of the economic cycle, right? And also at the stage of the world global economy, we're seeing a big market shift, not just at the inflation, but what's happening around in all the central banks, what has happened to all the other countries, how they're dealing with, I'm not just going to portray that inflation is is the biggest issue. We have more than just inflation, right? Supply chain issues, the demand is still high for almost every goods and not the services, but all the imports and exports coming in and out. And it's a crucial time to really think it through where you are financially and mentally prepared for this. I'm gonna go into investing.com here. So US dollar did go up. I'm gonna highlight this. Stop. I don't know why I was trying to do all this, but anyways, I'm gonna highlight this right here. Highlight this right here. The dollar index is up 0.28% right now. Everything else is down. US 30 is down. The US S&P 500 is down. Dow Jones is down, right? So I mean, yeah, it's the same thing. Nasdaq is down. I don't pay attention to the S&P 500 VIX. That's not me. So it's pretty cool. Watch list here to pay attention to. Don't look at anything else. Let's see here. Well, I'm gonna go to news-wise. I like this website a lot, compared to all the other websites. This website is very, very detailed. They update this thing almost, if not every 4 or 5 minutes, whatever's happening. So, now they got crypto news. This is crazy. So, I mean, you can look at stock market news, cryptocurrency news, commodities, forex, economy. You look at everything. So, yes, all these ads. You know what I'm saying? So, 5 minutes ago. And then this was the report that I was talking about that the Fed is to set rates for 75 basis points at the beginning of. So I want to talk about November, right? Midterms is already there. I don't really care for midterms. The 75 basis points, the highlight of November is the beginning week of November. So the first week of November is what? Non-farm payroll. And now we got the Fed the Federal Reserve raising 75 basis points, and then December they plan on raising rates again. So remember their target, it was like 4.4, 4.6% for the federal fund rates. So I believe that they're going to try and hit even higher than that before the end of this year, which would be 5% because they were talking about 5% at the last meeting. And that should cause what? Inflation to go down. When the inflation goes down, this is my personal opinion on this, but when it does hit that high peak that they're talking about, because they want to drop the demand, right, and increase supply, the the demand is going to drop dramatically. Like, who would be paying that much for, I don't know, maybe gas prices? I mean, maybe the cost of food, maybe the cost of, you know, maybe rent. I don't know, who knows. So, the three biggest things, right? Shelter, food, and transportation. I mean, that's the easy way I can say it. Those three things are at an all-time high, and it's gonna keep going high. I don't know when the peak is gonna be. Maybe next year during tax season, we might end up seeing a new spark of volatility. Maybe the markets might end up, turning down at that time, or maybe, things might be in better shape by then. And so I kind of want to go into this here. I don't want to talk too much about a recession because I mean there's a lot of people on YouTube talking about it, and so I just want to give you guys what I see here. Let's see. Wall Street Journal report: Fed officials are barely up a 75 percentage point at their November meeting, while some have begun signaling their desire to slow down the pace of increases soon. I highly doubt they're going to slow down. Stop. Stupid ads. That's it. Man, that's not enough news. Let me read the WSJ one. The WSJ was one that I was talking about from the Forex Factory one. So 75 basis points. WSJ said the pace of further rate hikes after that will be less clear. Has raised the target rate for Fed funds to 3.25 this year, its highest since the great financial crisis of 2008. Isn't that crazy? I'm going to read this right here. This is pretty crazy. I'll just read this. The Fed has raised the target range for Fed funds to 3.25% this year, its highest since the great financial crisis of 2008, in an effort to bring down inflation that has hit a sequence of 40-year highs. 40-year highs. Isn't that crazy? 40-year highs. However, in recent days, there have been the first signs that at least some members of the Federal Open Market Committee, which is the FOMC, want to slow the pace of monetary tightening, fearing an overshoot. So based on this paragraph, they're thinking that they might overshoot this rate decision. But I highly doubt they're just going to say, hey, let's take a step back from raising rates too fast. We've been raising rates every quarter. I highly doubt it. They're going to keep doing this until something gives. And more than likely, I wouldn't be surprised if the housing market gives first, really. That's what usually comes down anyway. It usually comes down to either the housing market or the big banks go bankrupt. Kind of like back in 2008. And so a lot of people were saying, well, it can't be like 2008. But I mean, look at how high the market's been. I mean, I'm not going to draw this picture, but if we were to just look at US 30, I'm going to go to US 30 chart here just on investing.com. And where's the chart for this thing? Hang on, guys. Oh wait, no, I'm on here right here. Trading. Let's go on trading. I've talked about this quite a bit. I'm gonna go to the weekly. Oh, my bad. I'm gonna go to the monthly. So let's talk about this. I'm gonna highlight this again for you guys. I want you guys to really see this big picture here. This is nuts. Too nuts. Don't mind the lines, right? I got trend line and 5 horizontal lines. But this was back in 2008. This is 2010. And now we're into 2022. Look how high this is, right? I mean, obviously in 2020, the pandemic of COVID hit. So that was a crazy sell-off, but it was just a short-term sell-off. And then they stimulated the economy. So when you stimulate the economy, you print money, right? Who's paying all that back? We are. We're all paying that back. There's always a price when they stimulate the economy and try and put money in your pockets. What they do is they jack up all the costs of everything. And all that money flows back to corporations and businesses. So I'm not saying that in a bad way, but I mean that's how everything's work, right? That's how the world works. So I talk a lot about this pair because this pair is a really big driving factor. And this is the reason why I call it Wall Street for a reason, right? This is the big dog. So if you were to just look at what happened back in 2000, I mean, this was the pinnacle stage of 2000, yeah, March 2nd of 2009. And the crazy part is March 2nd of 2020, we're talking exactly 11 years, exactly 11 years apart from the pandemic. And in 2009 in March, it's pretty crazy to see how this all unravels itself. And if we were to go another 10 years, which would be 2030, right? March of 2030, I mean, if they really skyrocketed even higher, I mean, it'd be a pretty bad, right. I'm not saying, here's the thing. I'm not saying that, you know, what I want to say is be prepared financially for the market crisis to come. I don't know how bad it's going to be. A lot of people are speculating that, this be a great reset. This might end up being, a really big, bigger than 2008 all combined. I don't know. I mean, we do know for a fact that something's got to give and the market's got to drop real hard, right? And so a big correction is due, not based on what COVID did in 2020. That I don't really call that a correction. I mean, they did it to where, right? They did it to where, hey, boost up the medical and pharmaceutical companies, right? I mean, if you were to backdate what Bill Gates talked about a year prior to the pandemic, you'd be blown away. I'm not saying this is a whole conspiracy thing, but if you look back at when he did a convention, he talked about the world would never be hold on. One second. Let me pause. All right, found the video. So apologize, guys. Let's get to it. This was a TED talk that he did, and this is still up. This is still on TED Talks. He talked about he talked about the Ebola virus, right? And then he talks about how we're not engaging in the pharmaceutical and medical companies to make some kind of vaccine or be prepared for the next outbreak or the next pandemic. I'm gonna highlight this right here. In 2014, the world avoided a horrific global outbreak of Ebola, which Ebola has been around for, since medieval times? I mean, it's nothing new, right? So it's nothing new. Thanks to the thousands of selfless health workers, plus frankly, thanks to hindsight, we know what we should have done better. So now is the time, right? Bill Gates suggests to put all our good ideas into practice, from scenario planning to vaccine research to health worker training. As he says, there's no need to panic, but we need to get going. Isn't that crazy? This was back in 2014. I believe 2015. There's no date. Hold on, let me find a date here. Yeah, April 3rd of 2015. So
we didn't have a group of epidemiologists this year.
I'm just running through the video.
About 10,000 people died. And have satellite maps where we can see where people are and where they're. And then we need to pair those medical people with the military compared to the potential harm. The World Bank estimates that if we have a worldwide flu epidemic, well, there's no need to panic. We don't have to hoard cans of spaghetti or go down into the basement, but we need to get going because time is not on our side. In fact, if there's one positive thing that can come out of the Ebola epidemic, it's that it can serve as a early warning, a wake-up call to get ready. If we start now, we can be ready for the next epidemic.
Isn't that crazy? I'm gonna pause it right there. That's pretty crazy, right? That I don't know, I'm hopping in on so many different things here, but I don't want to make this seem like, hey, Bill Gates is a bad person or something. I'm not making it seem like he's a bad person. He knows his stuff, right? He's invested in a lot of medical pharmaceutical companies. He's big in real estate now. He has big ties with Warren Buffett and all of them. So he's on a whole different level, right? And I'm not, like I said, I'm not gonna put him out there and say, hey, he's the one that started the COVID pandemic. That's way out of hand, right? Right. So it doesn't matter if it came from a China lab from China or came from overseas or we already started out here. Who knows, right? I don't really care for that. What I want to say is that he is right. We were not ready for a global outbreak, right? What has happened in the markets in 2020 and up until now, what we have seen, what the markets have shifted, right? And how this all just works in place, right? And if you just backtrack the history of all these videos, right now, I'm not talking about just this video alone, but the history of other videos that people actually been following the history of the markets when there was a global uh whether it be whether it be a war, right? Whether it be global tensions between two countries, big natural disasters that have caused, that has raged havoc in all the other in other side of the world, and tying to the epidemic, pandemic, and how this all affects the markets. It's crazy. Here's the thing, I would never suspect that COVID, that during in March of 2020, that this would have a huge impact here on the US markets alone, right? Spending was down. People wouldn't get out of their houses because they're so afraid of catching COVID. And it's crazy, right? Now, yeah, COVID has lifted, you know, people don't really care for much about it. Yeah, it's there. So you just have to be mindful that I wouldn't be surprised if they try to do COVID 2.0 or, you know what I'm saying. And so it's a time coming, and I don't know, who knows we could end up going World War III, right? People were talking about de-escalation, between war with Russia. I don't know. I mean, like I said, it's just too much. It's just too much of this, right? So I don't want to be babbling forever here, but do your research. Take a look at this. I mean, I'm not saying that everything is bad. There's always good behind the bad stuff, right? You can find good things behind the bad stuff. Find the positivity behind the bad news, right? And so don't just sink everything all in and be like, oh my gosh, we might end up going to a zombie apocalypse. I don't know what's going on, bro. Then I might have to start packing up the house with a lot of food and stuff. I don't care about that. Right? If it's my time to go, it's my time to go. And so that's the easy way I can say it. And so I just want to be able to put it out there for you guys because uh it is pretty interesting when you backtrack what happened in the past and then you backtrack the past with all the news events that tie to the past, those specific events. And this is crazy. So I'm not saying, like I said, it's there. The the knowledge, the wisdom, the past experience news, it's all there if you guys would want to read up on it. And so just don't go down too far in a rabbit hole and be like, man, this whole thing is a big conspiracy. I mean, don't get me wrong, there are some things I do think there might be, but that's just personal opinion and who knows? I mean, whatever happens, happens, right? We can only control ourselves. So other than that, stay tuned. I know I talked a little too much today, but I just want to give you guys some insights and some personal opinions on what I see here going on. And, be financially and mentally prepared if we were to ever go into a big, big recession. People are saying we're in a recession now, probably gearing up for a depression or the Great Reset or what's going to happen for next year. Next year is going to be crucial. Like I said, I'm just waiting to see what's going to happen at November and December. November, the another two more rate hikes. So, other than that, Tech Friday. I know it's a long video, but I appreciate all you guys subscribing, following me. Still, I believe in you guys. I want you guys to succeed too as well. All right. Much love. Peace out.